The Bank of Israel is the first central bank to raise interest rates since signs of a global economic recovery have started. On Monday, Bank of Israel Governor Stanley Fischer raised the benchmark rate to 0.75% after holding it at a record low of 0.5% since the month of March. Now, the markets have been trying to guess which central bank would be the first to raise rates, and how Israel fares may affect the timing of rate increases elsewhere. A bit of a canary in the coal mine for us here. And we turn now to Shlomo Maoz. He's chief economist of Excellence Nessuah Investment House. He correctly predicted the rate increase, while most analysts had expected rates to be held steady. And Mr. Maoz used to be chief economic advisor to Israel's Minister of Finance. He joins us now live from Tel Aviv. Good evening to you, sir. How much risk is there in Stanley Fischer's decision to raise interest rates?
Actually, there is no risk, and I think that he should continue to increase interest rates, because we have to bear in mind that in real terms we have a negative interest rates of around 3%, since the inflation here is around 3 to 4%. And we are creating bubble in the house markets. So he has to continue to increase interest rates, otherwise he's in trouble next year. He can reach to 4 to 5% inflation next year.
Well, the concern, sir, as you well know, is that by raising interest rates, he's risking appreciation in the currency itself, in the shekel, and that could risk the overall recovery. You aren't as worried about the currency market's reaction?
I don't worry. He can continue to intervene as he does now. He intervenes from one day to another. He has already had like $55 billion of reserves. And once we were going to accelerate our production and the GDP going to grow mainly as the beginning of next year, our surplus, current account surplus, will diminish, and then he will have to stop intervening. And by that, anyway, he's going to have the shekel lose ground like 4 or 5 months from now. So he has to do work in the next 4 months only, and then he has no problem at all.
Back on August 10th, Fischer had announced that he was going to end the policy of making daily purchases of foreign currency. Is there going to be a reversal of that policy? What indications have you seen about that intervention?
I think that around 3.78, 3.8, he intervenes and he buys the dollar and sells the shekels. And that's the reason that the amount of money M1 increased by 55% in the last 12 months. The M2, the amount of money increased by 15% to 20%. And then he will have to absorb such a surplus of the amount of money that he's printing now. But I think that he will be can handle it in the next few months. I don't see any problem. He wouldn't allow the shekel to strengthen more than that. Of course, I'm speaking about now about when the dollar against the euro is around 139, 143. So at that level, he will support around 3.8 shekel per $1.
Now, Israel's economy is very dependent on the level of exports, and some corporate leaders, including the CFO of Teva Pharmaceuticals, has said that a strong shekel would lead his company to actually start rethinking where they produce the drugs that they sell. When you hear comments like that from the corporate sector, how much do you think that's being weighed by Fischer himself?
Yeah, but on the other hand, we have to bear in mind that the government decided that we're going to cut corporate tax next year and 2011 and 2012. So from this point of view, where you have like a tax haven in Israel for the Israeli corporation. And the other thing that we have to bear in mind that the Israeli productivity, the labor productivity increased in the high-tech around 6% in the second quarter of the year. So once you look at the productivity, I don't see any problem to maintain such a level of 3.8 shekel per dollar. Of course, they are yelling and crying always like they used to do, but I don't see any reason to any corporate to leave Israel. And to be honest, I think that we are doing well. Around 54% of our export has to do with the high-tech, and we see more and more investment in the high-tech in Israel. This is our main export, is not actually high-tech, but we are set up corporation which we sell later on. We sell corporations rather than producing products.
All right, Shlomo, thank you so much for joining us live from Tel Aviv with that forecast. Stick with us here on Bloomberg News.